Good morning, everyone. I'm Jasodha Gulliya. I'm representing my NBFC Fynx Capital Limited, which is a BSc listed NBFC. We are focusing in the supply chain business and TL business, where our head office is in Mumbai and we are present pan-India through the partnership model. So I have got a wonderful opportunity to interact with tech-minded people here. So all the speakers are from the tech background, who is actually considered to be the backbone of any NBFC or fintech. So before we begin, I'll explain that how our panel discussion would be revolve around. The entire discussion would be fintech collaboration, how it is going to be helpful to build a strong business, specifically where we want to collaborate with the another NBFC in terms of NBFC or fintech platform, in terms of co-lending, BC partnership, and anyways, securitization or other way around. During that, we'll be focusing that how technology is helping us to capture the market, more places where we are physically not present, and how it is helpful in the innovation of a new product, how we can reduce the cost, and also that how we are meeting the government RBI compliances at the same time. So before we begin with the discussion, I would request all the panelists to give a brief introduction about themselves and the organization. So we'll be starting with you.
Yeah, hi. Thank you, Jasodha, for the introduction and, of course, laying out the agenda for this panel discussion. My name is Mukul Agarwal, and I am the head of IT for Religare Housing. Religare Housing is primarily into affordable home loan segment and, of course, the LAP as well.
I think so. No. Yeah, 1 minute. Start talking.
Good morning, everyone. My name is Dominic. I represent Namdev Finvest. I head the technology for them. I come with around 25 years of experience, migrated with multiple domains, now with the banking sector from last 12 years' time. So Namdev is basically purely into an MSME, solar. We have a diversified business, and I've been here from last 8 to 9 months' time. So my focus area will be more of digitization, aligning the business with technology. True. That's how I introduce myself.
Hello. Hello, everyone. Good morning. My name is Prasenjit, and I am representing Vivriti Group here. We are a B2B NBFC, and we do also have an asset management company under the group. Primarily, we're a B2B company, and we do B2B2C in the retail context. Our headquarters is in Chennai, and of course, we are present in Mumbai and Bangalore as well. Thank you.
Yeah. Hi, everyone. Good morning. This is Sanjay Mahajan. I represent Fusion Finance here. I work there as a CIO. Close to 34 years of experience, pretty sector agnostic, work across industries, which helps me, understand from different organizations, different sectors, and put all that experience into the new sector. So 10 years with large manufacturing automobile companies, 10 years with world largest FMCGs, Gillette, P&G, at a very strategic positions, and 6 years with retail, Bata, Yum Brands, and now almost 9 years with microfinance, NBFC industry. Yeah.
Hello, good morning. Good morning, everyone. I am Devendra Sharma, CTO from DMI Housing Finance. At DMI, our vision is to enable home credit more accessible across millions, and also make sure that we use technology as an enabler, not from an operational efficiency perspective too, but from a true understanding of customer to serve their unique requirement.
Thank you, panelists, for introducing yourself so the audience can know you better. As a chief strategy officer, I always look for the opportunities where I can have collaborations with the fintechs, where I'm looking for the business, where I can make my footprints in the places where I cannot directly in person I can move. So we look forward for the NBFC or junior partner for that matter, as a secondary partner in case if it is a co-lending or a BC partner, where I can generate revenue by onboarding business partner, and I can also use the full the technology where I can make the good, I can provide the good experience to the borrower also. At the same time, I look forward for the upper hand side, where I look forward for the lending partners, where I can provide those similar experience where I can expect it from the business partner. I can provide the same experience to my lending partners. So as a strategy person, I always look for the use of technology. So this is not really a discussion, rather this is actually practical experience we are facing, and I'll be going around those kind of experience only. So Dominic, I'll come to you first. Since Namdev have a good footprints in MSME lending, specifically that small ticket size business, and recently you have entered into solar financing, electric vehicle financing, where the customer is at the, if I see the bottom pyramid of the customer, it is exactly the same. So how technology is helping you to bring that customer with the smoothless journey, and also making them educated about the technology? It's what I feel is this is really difficult thing to make them aware of the technology, and apart from the manual experience, bringing them through the technology. So I'll take your view on this.
So, as you said, I come from a company where MSME is our maximum business, what we do, and solar and electric vehicle is another one, because there's more of a subsidy kind of thing. So if I talk about MSME, we do an underserved and unserved kind of thing, where it is rural 3 and 4 cities kind of things, where just previous panelists were talking about the kind of calculation they do for income assessment and all those things. So these are certain things where you get manually involved, but you have to convert that into a tech part. Tech part is not that 100%. So MSME doesn't work in a 100% technology. It's more of a, you can just say 70-30 percentage, because 70% of the people today know what's happening in the technology. When you look at the rural part of India, internet accessibility is there, so people understand what's happening in the. Today you have a lot of subsidies coming to them, so that's helping us to build a better technology platform for them. Like we do a secured MSME building. So when you say secured building, that we do a micro lab kind of thing, where we take the collaterals and all those things. For example, if you're talking about the entity, so normally entity, we don't, these guys don't take the loan on the entity part, they take it on the individual part. So when you talk of the individual, he's carrying all the documentation. But when you look at his business point of view, he may not have that kind of tech built there. Like, not GST will be there. They call it as kacha pakka calculation. So that's where, So that's where we come into picture. We assume things, take this into consideration. And we see the similar part of the business. People who are in the same business understand how they work, the pattern, the behavioral pattern. On that basis, assumption kind of technology is built. Basically, all this happens at the underwriting level. LOS level, acquiring a customer is easy, like your Aadhaar, PAN, you onboard the customer. But at the underwriting level, you do this kind of activity, which is more at the niche stage. And we are building multiple things. See, every customer is different from another customer. Like we have customers who go up to 2 lakhs, 3 lakhs, 4 lakhs, where we don't take a financial. Now, we don't take a financial doesn't mean that we don't take his bank account. We do a penny drop and take. So that a level of 70% of technology we're building. And when you're talking about solar, we work mostly with the dealers. So a person who's going to have solar at his place has got a minimal kind of salary part. So for him, documentation is not a part. There, what we do, the TAT gets reduced. Your, your FI and all those things comes reduced when you use a lot of technology there, like Aadhaar-based verification. Your account aggregator is one which we do, because to assess his income and see, easy able to pay back my money. Okay, because, and solar, and when you talk about electric vehicles also, it's also more of a dealer-based activity. So we see both the dealer as well as the customer to whom we are funding. There, the technology plays more of in the underwriting part. So where we use APIs like account aggregator, penny drop, then we started building our own BRE engines depending on the behavior pattern of the customer. So we built something like that. As I said, 70% people adopting technology. If I tell you an incident, recently there was an RBI circular where Aadhaar XML was supposed to be stored. We can't use Aadhaar. And they brought in DigiLocker 2.0. This is something new to the rural customer, because for a rural customer, he doesn't carry DigiLocker with him. For him, it's a new thing. So you start training him. So that's how you educate. Second thing for me, that technology helps me to do my process very fast. That's basically my logging in process, authenticated data. So underwriting will always be easy. So wherever we find there's a gap, we educate, another way bring in the technology so that, we start moving. So it's more mix and match. And I think it will take some more time for the rural part of India to adopt the exact technology and understand what is it. But they are very good in e-commerce and making reels and all those things. But certain things, they are very little bit cautious on that. That's how we plan our technology.
Very true. Especially educating those bottom line of customer, it's really difficult. So Prasenjit, I'll come to you since Vivriti is also into the institutional lending. So that is completely different what Namdev Group. So how technology is helping you to give a smooth journey onboarding institutional, specifically for the institutional debt?
Am I audible? Yeah. So I'll take that question in two parts. So the first part of the story is basically the B2B. So when I was giving my introduction, I was saying that, we are primarily a B2B NBFC. So there basically the credit risk assessment, that becomes the most of the, the heavy lifting that we have to do where the tech comes in basically. So now let's say in a B2B context, it cannot be a totally tech. It cannot be a totally tech driven because it is more of a physical, basically. That's what we say. So it's like a physical plus a digital kind of a journey that you have to do. Of course, my business RMs, credit RMs, risk RMs, they're very, very close to the client, and then they go to a client location, get the data, whatever data is available as part of the, in the Google or in the open domain that you can access. Basis that we have a system which is in-house development system. There basically we do the complete underwriting, and we give an internal rating to the customer, and basis that we derive the limit. And then from there basically our ticket size is pretty high in the B2B, so it goes up to 50 crore. So there basically we have to, so this assessment is extremely important because if one customer goes bad, then it's a big problem, right, for us. So our credit risk assessment, and recently we also started the ESG part of it. So that completely happens in the Credilist platform, which is an in-house platform where the limit management and as well as the rating model, that is totally in the system. Now, from that system, basically we derive there's a credit committee, we call it as a CIR report that comes out of the system, which goes to the credit committee, and then there's an approval that happens totally in the system. Now, here the AI is something that we are implementing right now, which is currently WIP, because we are completely working with the data. It is humanly not possible that, you go through the entire CMRS of a customer or entire, balance sheet and whatever the reports that you have publicly available. So those reports you're going through manually, it is not possible. And where basically the entire CIR journey that we have, which typically used to take weeks earlier. So that is where we are trying to use AI, where we are trying to bring that CIR piece to somewhere in days from weeks. So that's the primary target that we have. This is in the B2B context. Now in the B2B2C context, we do have a platform, which is Apollo, where basically it's totally API driven. Like, you have a system, we go to a client. So let's say I go to Dominic. He is into solar kind of a financing in the rural market, which is primarily MSME. So I expose my APIs to him. So, and then from his system, basically, I would be integrating. And so earlier in a BC business model, when I was part of a bank, we used to enforce the policies to the client. So let's say I have an accounting policy. I have, let's say my asset class of a term loan is going to work in this way. But when I moved to Vivriti and then we were completely envisaging this entire co-lending journey, we are pretty clear that it's not possible the way in the bank works, right? So how the system works, we actually replicated 36 type of asset classes in the system. Any type of asset class that comes as a client, I can actually configure. It's totally a configurable system where you can configure and you can configure the credit policy there. And you can also, and there's we have a downstream system which is called Zeus, which is the core banking system. Even that is totally in-house developed, where basically we can configure these asset classes depending on so when the product configuration is happening, when a new client is getting onboarded, we do this product configuration in Apollo as well in Zeus, and then the loan booking for the end borrower that happens there. Now, from the client's app, let's say it's a fintech client or it's it's a NBFC. From there, the data transmits through the API, come to my system. There's a credit filter that runs on the client, and then it's an automatic decision that happens in the system, and the disbursement happens. We have reached so far almost a 30 minutes journey in this. And I'm sure this is going to change the game in future in terms of the co-lending.
Certainly,
So
that
that's
is-
the B2C context that I have. And of course, AI is going to play largely a big role because entire piece here is all about data. So we collect data, we collect the information from the clients for the end borrower, and this decision is totally automatic. I can't afford to have during month ends or we get like in 10,000s clients. It's impossible to have a manual kind of a journey there, basically.
So Sanjay ji, we have seen, different kind of products require different technology. Also, the way of reaching to the customer onboarding journey is also different. Since Fusion is more into microfinance segment, where the customer is also again on the, below line of customer line, I would say. So since we were discussing off stage also, this is a most difficult to make them aware regarding the technology specifically. And in case if we are doing this through the fintech collaboration, so how difficult it is in terms of technology, I would say, and how this has benefited also while onboarding a customer, onboarding a partner, either through the co-lending or BC partnership. So in case you have that fintech collaboration with them, and also not just you're relying on the partner, but then further you're onboarding through the partner that customer who is hardly aware of the technology. So your view on this?
Thank you, Jasodha. Very interesting. As you rightly said, we are dealing a customer which is typically at the bottom of the pyramid, tier 5, tier 6 villages. I have spent 2 stints with a similar kind of organization, and the first organization where I spent with a similar kind of borrower, it looks very challenging, but at the same time very interesting. We are dealing with those kind of clients which are completely uneducated. They don't know what is that loan, what are they opting for. So there are processes defined within the organization where you teach them first, how is it going to impact. This loan is not for buying some, product. It is basically for an income generation. So, I joined this industry in 2016 where I saw in the villages, there are branches, okay? And those branches are completely manual. There is no technology around that. I've seen that stage. And now after 7-8 years, I'm seeing a different trend where people have come to a certain stage, but have we covered everything? Not yet. There is a lot of scope to be covered. In the first stint, because it's a generic question, so I can tell you, in the first stint, I have seen where branches didn't have any technologies. All the customers, all those documents were filled in manually, and those documents were sent to the regional offices. And when I'm saying that, I'm talking about a volume of 4 to 4.5 million customer. Imagine how these transactions were happening on the ground. I'm talking about 1,000 plus branches, okay? Every branch has 7 employees, and they're dealing almost 4.5 million customer manually. Now, how do you convert it out? It looks very challenging when you do that.
Definitely.
You slowly started building that technology, and I can tell you in the first stint, we turn around that customer acquisition to loan disbursement cycle from 18 days to not days, minutes, okay? It looks very exciting, and when business gets operational cost, reduced by 2.5%, it is very, very exciting when the results.
Challenge shift to technology.
So coming back to my current organization, Fusion, we are on a similar journey at this point in time. See, fintechs and NBFCs, they go hand in hand. I would say one soul, multiple bodies, they cannot live without each other. Can NBFC be successful without fintechs? No, they cannot. So we have to, utilize all those ecosystems effectively so that we can create that consumer experience in a right way. So in our organization, rather than customer onboarding, KYC verifications, credit underwriting, we all do that in our NBFCs. How are we making it different? For example, the rural customer, how do you do a credit underwriting for them? Many cases, they don't have a record, okay? So fresh customer. In some cases, we are taking use of AI where we are creating a customer lifestyle index. So how that customer lifestyle index is identified? People go take a photograph of a video at the house in the village in tier 5. In that house, we identify how many fans, how many coolers, how many buffaloes or cows, okay? How many rooms, गैस है या नॉर्मल स्टोव वाला चूल्हा है जो उससे चलता है. So everything based on that, there are some value created, and that gives you, this is a customer lifestyle index, then the FOIs are calculated. Very interesting in a very different way. It is not a daily or a NCR where customer is sitting in a home, he has a property and you can do that. It is very, very complicated, but at the same time, as I said, very interesting. Now, how do they repay their EMIs? There is a concept of center meetings, okay, where we don't give loans to an individual customer. We give loans as a group, okay? So 10, and these are all ladies customers, okay, from 18 to 58. And when you give them loans, you don't go to their houses to collect money. And these are the customers where disbursements are happening cashless, but collections are not happening cashless. Only 8 to 10% of the collections are happening cashless. Otherwise, it's whole cash. So we call them into a one location where there is a center meeting. They come there. Now, if some customer is not coming, okay, it is a sign that she will get into an NPA very soon. So how do you take attendance? Okay, facial recognition, the technology usage of how do you, all ladies are sitting there, you're doing a live photo detection and doing those, facial recognition and saying these are present. Okay, now why do we need to do that use of that technology? Because attendance is a very critical parameter of a customer. Okay, if you don't use such kind of technologies, it is at the discretion of a field officer and incentives are linked to that. So those kind of usage of such cases, and then we have also created a customer service app, okay, which is very, very different than normal business where you give a loyalty bonuses to your customers, okay. So all those things, as I said, you have to depend on ecosystem, you have to do those integration in this customer service app. They know these are my loyalty points based on certain condition if I have obeyed in the whole life cycle. At the same time, she can also make payments through that. So embedded finance into those applications. So
Absolutely.
It's a very, very interesting journey, and yeah.
Thank you. In fact, it's a very insightful about knowing about this particular of segment. So, Mukul, आपका product बिल्कुल ही different है. What product we have discussed so far, your product is though different because where without meeting a customer, without knowing the property, since you're doing the housing finance, so without meeting a customer, the entire journey cannot be possible. So how you facing this challenge, and how the tech is helping you to meeting that turnaround time specifically? Because any borrower, once he given hand over the documents, he always want things to be done quick. So how you are resolving this problem through the technology, and you and your team in your organization? And since honestly we have a few minutes, so
I'll try to kind of answer this very concisely. I think, Jasodha, you've asked a relevant question, but unfortunately in our industry, in housing especially, we have seen is most of the disbursements happen on the last days of the month. The managers or sales managers will continue to sit on the applications for the entire month for at least until 20th of the month. They will wake up only on 21st and 22nd. Then the system goes slow. That's the basic excuse. The system is not working. But then what we have done is we have planned the system capacity in such a way that it is available for the underwriters and for all the other users of the system, that it works at the requirement, at the capacity that they need. Now, coming to the first question, I think we do not lend to the lowest bottom of the pyramid that the micro and MSME segment does. We actually lend to the people who have moved up a little up in their lifestyle, because that is why they are able to, afford a home, buy a home or land,
yes.
or maybe take a loan against property to invest in the business. So underwriting in those, I mean, onboarding a customer, we all know that you will have a proof of identity, proof of address and whatnot. You can do an API integration, but then underwriting that, okay, is the property worth it? Is it constructed appropriately? Are the photos actually the photos of the property? Is where physical visit and verification and customer interaction is important. And no, I'm in our business at this point of time, we do not also want to get rid of physical interaction with the customer completely, and do not want to move completely on a digital mode. That's where we are. We want to continue in a hybrid journey.
Very honest answer that this particular product cannot be completely on the tech-driven platform. So Devendra, I'll come to you on the same pace, because since you have the similar product of housing finance, so I'll come to you regarding the compliances, specifically when we onboard a partner who's sourcing business for us and in the housing segment, and we have some tight policies regarding the FLDG and then recourse also. So how you make sure that your technology is helping to save you towards the security that coming from the partner, and also because this is a long tenure product. So how technology is helping them to serve smoothly without any hiccups for a long time?
Okay. So from a DMI perspective, we basically change the problem, and we believe digital journey can't be digital fully unless until you look at the process, you look at all the handshake involved, and based on the handshake, then you can change the process, which handshake can be removed without interrupting quality and the processes and compliances. So we look from that perspective first. We've put lot of effort and energy initially on that phase, and then we look at developing those solutions. So if I look at any solution from existing customer, we provide lot of SENP customer. So if from a compliance perspective, how I can do the income assessment. So we created a PD app, but then we found that certain customer, I need a senior zonal credit manager need to attend that call, but zonal credit officer is sitting in Delhi and customer is in Jaipur. So how I can do the PD properly? So we created a PD app internally in-house with video conferencing enabled, so that help us to make sure that the lowest credit guy available can go there, and other senior resource can talk to customer, and you can look at the stock available and how much sell, the credit guy talking to references. So all those body language, everything is available to senior guys. Even recording is shared in case he is not available. So later on, he can view those things from a credit perspective. From onboarding, what we believe is lot of things is available, lot of developer portals available. Even these days, lot of DSA aggregators are available. So instead of integrating with one DSA, you have lot of aggregators. You integrate through APIs with them. You can get lot of leads and application level data through them, and you can process those faster. Absolutely. So good advantage I am having is I have built in-house LOS LMS. We are using BRE engine. So previously when I joined 10 years back, we were taking sanction was around 6-7 days. Now with BRE and all those automation, we are able to do in few minutes. As soon as we receive all the requisite data, we can able to onboard. Key challenge I think we are currently facing is from a co-lending or when we are doing BC partners, because training them, educating them to use our system. And because sometimes they have their own system, because a lot of basic players are small, they don't have a technology much driven knowledge also. So you ask them to do the API integration, it is a challenge for them.
Probably they don't know.
So they don't have a staff also. They don't, because you are doing 2-3 crore per month with them, and if ask them to invest certain big amount of money to integrate system, doesn't make sense. So sometimes you can give your system to them to do the requisite entry, and certain places where they are using the system, we created a Excel based enabler for them to push the data back to us.
Absolutely. Very relatable, in fact.
And that way, one good advantage is that we are able to push our policies accordingly. So being using a BRE engine, we are able to put our partner specific credit policies, region wise policies, so that, and it's take within a less than minute. If I have all the requisite data, I can pull everything within minute. Good part is that government also come up with a lot of good things, which is account aggregator, which give the good data to you to make decision instantly. So those things help us to make thing better. Even we have done lot of automation in vendor portals also. So previously portals technical and legal report used to take few weeks or few days, but now we have integrated, so through our system they can generate report and they can enter data directly into our system.
Absolutely, very relatable, in fact. And since we have discussed, and thank you all panelists for discussing various kind of products where they're helping, we are getting help of the technology specifically for increasing the business and reducing the time, meeting on or onboarding those kind of customer which are not even available on technology. First of all, you will have to go in aware of the technology to those customer first, and then you can onboard them. So reducing that, initially, not really reducing that, initially you will have to invest the time for that. So thank you for that. I would request question in case anyone would have regarding the fintech collaboration in respect of co-lending, VC partnership, or how the role of technology is there.
Great. I think we can take one question here. We're almost up with the time. Ujala, can you make sure, audiences, if you have any question, we can raise our hand. We can get you the handheld mic right away. You know, with these amazing key takeaways, I think one is data is the new gold. The second, educating the customers, the rural areas, rightly mentioned by you. And since you have mentioned, taking a lot of things from physical and manual work to digital now, which is reducing the work from 18 days to a few minutes, that's beautiful. And I'm sure we should have a lot of questions around it. Don't we?
I think maximum question has been already covered because there was a diversity in the product questions
Absolutely.
and the experience. So I hope everything is quite clear.
Oh,
Yeah.
All this. Yeah.
I think, Sanjay sir, you tried to tell the behavior, right? Back in 2016, when you started, the journey, the way, let's say, you go and talk to a woman in a center, and then from there to in 2025, do you see there's a behavioral change when you said that you are actually going and you're able to click your photographs, and then from there the AI engine runs and tell you that what are the how many fans or what kind of chula that that client use and all that, kacha ghar, pakka ghar and all that. I remember when I started my career, and that point of time I was traveling with one of my feet on street, and people were so shy that they're not even allowing us to enter the home at that point of time. So what do you think? I mean, how do you sense this industry has come up in last maybe 10 years here?
Yeah. No, very relevant question. And I have seen this change to a larger extent. Mobile penetration. Customers didn't have those phones and they have only those keypad phones. Now customers have, or even on the ground, and companies like microfinance and other companies are also helping customer to get those cross-sell products. Okay. They are also giving along with loan or something that, hey, this is a mobile, because we know mobile is a key parameter for customers to get access to our loan data, to get access to pay your EMIs and everything. One is that. Second is disbursements at that point in time used to be cash. Now it is 100% cashless in the industry. Cashless collections are happening rapidly. There are multiple methods. Organizations are requiring that. So somewhere around 10 to 12% of cashless collections are coming. One behavior which needs to be changed is basically the rural customer don't keep their money in their bank accounts. Okay. Yes. If they start keeping that, we can't put eNash, but we can surely put UPI too. We are right now working on one behavior which we want to change is basically we want to ensure that all those customers should have a UPI ID. So we are looking at those CGT and GRT processes, which is during our loan, onboarding process, where we want to guide them and engage some fintech company who can come and create their UPI ID there itself. It will help our cashless collection in a larger way. So these are the things which I've seen here.